Hello and a very warm welcome to you. I'm Natalie MacDonald and you're watching Sydney Direct. The Aussie dollar in the wake of that RBA shock rate cut, it tanked, it rebounded, it moved pretty much all over the place. I caught up with Janu Chan, economist at St George Bank on Wednesday post-decision to find out what exactly market reaction was and also where we can expect the Aussie dollar to move in the year to come. Janu, welcome. Thank you very much for taking the time to chat with us today.
No problem, Natalie. Great to be here again.
Okay, now RBA, we did have very light volumes in FX trade ahead of that rate decision and ultimately the rate cut. Was this perhaps a result of markets really not being able to create a consensus on which way the RBA would go at that first meeting of the year?
Well, when there is uncertainty, there is going to be light trading volumes. We did think it was going to be a close call, and that's probably reflected in the wide range of forecasts for the decision. Exactly how close of a call, we're not sure yet. We're going to wait till Friday when we'll get the statement on monetary policy. The RBA will be publishing their growth and inflation forecasts, and that was one of the key reasons why they cut.
Now, in direct sort of post-trading, it's fair to say the Australian dollar tanked. Really, we lost about a cent there. What are we seeing now, though, sort of in more reactionary terms as we've kind of moved on from that call? And what are we likely to see perhaps in short to mid-term trading as well?
It did fall quite sharply straight after the announcement, but overnight it did rebound and regained all of those losses. It's probably on the back of Greece coming out and probably hinting that they're not pushing for a write-down in their debt. So that boosted financial market sentiment and in turn helped boost the Aussie. I think the Aussie has fallen a long way in a short space of time. It might be time that we see the Aussie trade a bit sideways over the short to medium term. But we do have some risk factors on the horizon. In Australia, as I said, we've got the RBA commentary, which could determine whether the RBA is ready to go again and cut rates once again. And also in the US, there's risk there with the US jobs data this week.
Is it those risk factors then that continue to encourage investors to sell off the Aussie dollar?
They are. Those risk factors are probably going to keep the Aussie under downward pressure. For example, the diverging monetary policy stance with the RBA looking at an easing bias, the Fed looking at tightening. That's going to continue to put downward pressure on the Aussie. Also, commodity prices, they have been under pressure, and that does point to a weaker Aussie over the longer term.
So you're seeing for now then perhaps a little bit of sideways trading in the Aussie dollar. Economists really are struggling to pick exactly where the Aussie dollar could end up. Where are you seeing sort of perhaps even towards year end, if we can go that far?
We still think that the long-term trend is down, and those factors are probably going to keep the Aussie dollar under pressure. We've got an Aussie dollar forecast around mid-70 US cents for the end of this year.
Jenny, thank you so much for the time. Thanks.
No problem. Thanks, Natalie.
That is all we've got time for right now, unfortunately, but do stay tuned. The Dukascopy TV team will be bringing you plenty of FX updates and analysis, so do stay tuned.